All right, we're back. Tasty Crypto Show. I'm Dan Cecilia, and today we've got Greg Magadini, professional options trader and head of derivatives at Amber Data, back on the show. If you're not familiar with Greg, he's a regular on the network and always brings us really unique insights and trade ideas from the crypto options market. Greg, it's a pleasure to have you here. Love chatting with you. How's it going?
Thanks so much, Dan. Happy to be here. Going well. A lot of exciting things happening. We got some interesting Fed rate repricing and some effects in the gold market and crypto market. So I'm excited to talk about all that stuff.
Yeah, for sure. And I think we'll just dive in. Obviously, I love reading your newsletter, love, the stuff you've been publishing over at Amber Data. So let's just get into that and just do, start off with a crypto market discussion. After last week's payroll data, there was a drop in that interest rate expectation that fueled kind of a bit of a rally toward the end of the week. But you mentioned crypto prices didn't follow. Do you know what the reason is for that divergence, or do you have any insight there?
Yeah, so it's very interesting because obviously gold is a lower volatility asset than Bitcoin. So gold vol, if you look at the GVZ, which is the gold vol index, it's about 19. DVol, which is the Deribit Bitcoin Vol Index, again, 30-day VIX style index, has about 37. And you had, almost 5% rally in gold and almost no movement in Bitcoin itself. So my base case scenario is that Bitcoin is a little bit of a mix of digital gold and risk assets. And I think it's a little bit of a tell to see the risk asset component underperform. So the first thing I just want to show here, if we look at the CME FedWatch tool, that's showing us the implied probabilities of a Fed rate cut in September. So we can see here the probability of a zero rate cut is now 0%. It was about 14% last week. And if we go out to October, the probability of two rate cuts went from 48% to 71% week over week. So you're getting cheaper money being priced into the market. Now, what's really interesting about that is that markets are forward-looking, so the risk assets are rallying on the back of that. But once that's priced in, what's the safety net? So to me, seeing crypto underperform a little bit is a little bit of a note of caution. Obviously, the trend is higher, so you don't want to fight the trend, but we got to think about how can we hedge out sort of that risk asset component and maybe isolate the digital gold component. Just for context, the market cap of gold is about 24 trillion, and the market cap of Bitcoin is about 2.2 trillion. So Bitcoin's only 9% of gold. All of crypto is only equivalent to Nvidia's market cap. So crypto's still small. There's still a lot of upside. But that being said, it is a bit of a risk asset, and I have some vol data to sort of confirm that narrative. But happy to just pause it there and kind of take it from there.
Yeah, for sure. I think what's interesting is you kind of label this theme where there's this bad news is good news for risk assets. But I think what you're mentioning is we're starting to see Bitcoin's kind of a tell, right? Bitcoin isn't moving with gold. And it's, even with these rate cuts priced in, we're still, typically that's what positive and bullish for risk assets. We're not seeing Bitcoin and crypto move that much. So is that more of a tell to hey, maybe there's some risks here, or maybe it's priced in and we're just not getting, maybe it's time for a caution or time for pause. Do you think that's what it is? Is it kind of hey, maybe after September, we're not totally sure where things are going?
Yeah, I think there's kind of two things to look at that really paint this picture for me. So let me show you this chart right here. I think this is very interesting. Okay. So this is 180 days till expiration, 25 delta risk reversal. So that's looking at 25 delta call implied vol minus the 25 delta put implied vol. So when we're above zero, calls are more expensive. When we're below zero, puts are more expensive. So we could see back in the 2022 era, when we had, a lot of interesting things. We had the FTX crisis, we had the Terra Luna crisis, we had Three Arrows Capital going bust, all those things. We were in that negative risk reversal zone. And then we had a brief dip here in the SVB banking crisis. Again, that was a kind of a moment for crypto as well, especially the stablecoin world. So we got a quick dip and then it just bounced back. And ever since then, the vol profile has been to the upside for Bitcoin. So the option market was pricing in positive spot vol correlation, which is the opposite of equities. Equities typically have negative spot vol correlation. Gold can go both ways. And so what we're seeing here in crypto is, as of, call it last week, the long dated relationship of the spot vol correlation being priced into the vol surface just flipped into the negative, not by a lot, but just by a little bit. So there's kind of two things I'm thinking there. One is, are people hedging? Are people essentially, feeling bearish? Or is it more that we now have institutional investors holding Bitcoin, selling covered calls, typical type of risk profiles that equity investors would put on in terms of options? And so maybe the investor base is the same investor base that invests in equity indexes and are just doing a sell the covered call, buy the put as security type of flows. But regardless of the reasoning, that the outcome is the same. If the equity investors are kind of repricing the vol surface because they're selling covered calls and buying puts, and it's reflecting in that negative risk reversal, that still means that if equities crash, they're going to be the ones who liquidate. So I think it's kind of a tell to just see that long dated relationship start to become negative for the first time in almost 3 years, or well, I'll call it 2 years now, 2.5 years.
Yeah, that is a really interesting chart, and I think I do sense too, because like I personally look at a lot of like what's going on in the market sentiment wise, right? Like I'm big on Twitter. I'm listening to kind of like the talking heads of the space, and you're beginning to see that. I don't want to say chaos, but like with all these announcements of these treasury companies, and now I saw WorldCoin one just announced today. There's all these like altcoins that are sort of establishing themselves with these treasury companies, and on the back of that, we had some of this, economic data that didn't really come in that well. It gives me pause as somebody as somebody who's been in the market for a while, because it's just like, how many of these treasury companies can we support? How many of these tokens can we support? So it's just interesting to see that that's turned negative, that there's a signal there. And the last time we kind of saw that was something broke essentially, or some things crashed. So, maybe to your point, it is sort of just a short-term thing, or it kind of, maybe it dips below and comes back. But that term structure is, or the risk reversal rather, is an interesting one to take a look at. Anything How about ETH? Because for a while, the last couple of times we've had you on the show, we talked about, that relationship with implied to realized vol on Bitcoin, being that realized vol ends up coming in lower, so there's more premium there. But ETH, you mentioned you were bullish on ETH. So is there anything that you're looking at in ETH, maybe the term structure, or just sort of ETH spot?
Yeah, I would love to jump into ETH because I think there's some really interesting trades. I think just before I jump into there, I do want to talk about sort of where VIX is at, because VIX is a really interesting way to hedge out risk on versus risk off type of events. And so even though Bitcoin is starting to price in a little bit of risk off hedges, where hedges are still cheap is the VIX complex. So let me just show you what I mean here. So first of all, if we look at commitment of traders, the CFTC COT report, we can see large traders are essentially short VIX futures to a level that we haven't seen in years. So the positioning in the VIX market is extremely short. So that's kind of interesting. Then if we look at the relationship between cash VIX versus front month future VIX, we can see it's kind of middle of the range. So cash is about, $1.50 below front month future. But what gets really interesting is if we look at front month future versus next future out, which would be September versus October, what we see here, and this is a 5-year chart. So this is weekly data on a 5-year chart. I mean, the contango extremity between September versus October VIX is the lowest we've seen in 5 years, essentially. Now, something that's really interesting to note is that the expiration of the September VIX future is on September 17th, which is the day of the FOMC rate decision. So the VIX is going to expire in the morning, and then at 2 p.m. we'll get the FOMC rate decision. So what I think is happening is that risk sentiment is at extremely bullish levels, almost complacent, you could say, because we're pricing in sort of that rate cut. So what's interesting is if you want to get long Bitcoin, but you want to hedge out some of the risk off uncertainty, the VIX complex is really cheap right now. So you can essentially get long Bitcoin and do a dirty hedge in the VIX complex and kind of do that type of trade. So I think that's an interesting positioning. The other thing that we just chatted about, or you were asking about, is Ethereum. So Ethereum, I'm still bullish Ethereum. The trend is still higher. We're right below all-time highs, but I think it's logical that we consolidate a little bit below the 5K level. Prices have to trade here to make sure that they're concrete, so to speak. But what we see is we have an extremely flat term structure in terms of Ethereum. So if I look at this chart, let me just show you the term structure real quick with a live chart. So we can see here with a live chart, let me take off the forward vol. So you can see, forget the dailies at the very, very front, but if you just go to, September 19th, so that's next Friday versus end of year, I mean, it's basically the same vol. So the reason why that's interesting is if we jump back to this chart, this is showing us term structure richness. It's showing us the average differential between key expirations, 30 days, 60 days, all the way out to 6 months. And so when we're below 1.0, we're in contango. When we're above 1.0, we're in backwardation. And right now we're at this very, very, very flat term structure. So in my mind, this is kind of an interesting setup. I can buy, say, October upside calls, call it a 25 delta call, and I pay 65 vol. And then I can sell the September 19th 25 delta call and get paid 65 vol for that. And the idea here is that as we sort of consolidate that short diagonal call, the short September contract is going to fall off, or as days go by, I pick up deltas as that short contract kind of decays pretty quickly. And then if the market rips, we have a good stop level. We know that breaking past that 5,000 level is a time you would take off that trade. But the hope is that time goes by and then we kind of break out after that first front month contract approaches expiration or actually expires. October is going to be key for Ethereum. We're going to get, it's rumored that we're going to get the SEC approval or denial of staking ETFs, staking yields. Okay. And so if we get staking yields in Ethereum, that's a catalyst for higher prices, in my opinion. So that's a really interesting sort of setup.
Yeah, no, that is interesting. So let me just take a step back just so we can kind of go over, because there's a lot of stuff here. So the first one I want to go back to is getting long is the VIX Bitcoin trade that you talked about, where you could be long just spot Bitcoin, right? Or whatever Bitcoin ETF, but you're hedging that by buying buying calls on the VIX essentially to kind of hedge that risk if VIX spikes. So if risk off spikes.
There's a few ways you could do it, but essentially, you want long delta exposure. So you could do that by doing a couple things. You could sell, put spreads on UVXY or UVIX or some of those ETPs a little bit out of the money. You use that premium to buy some of that long dated Bitcoin call that's trading at a discount compared to puts. That's kind of an interesting structure to play. You could just buy Bitcoin outright and buy a couple calls or call spreads on VIX, with the idea that if Bitcoin dips, you're going to get some sort of rally in the VIX as well if it's a risk off move. So those are kind of two things you could do.
Okay, and would you do that in the October expiry?
Yeah, I think the October expiry is really interesting. So September, there's kind of two things here. So September is pretty cheap right now, so I wouldn't be surprised if there's a little bit of an up move towards mean reversion in the September futures, which would help out those ETPs. But I think the true move is going to be a pretty firm VIX in the month of October after rate rallies have been fully priced in, and then we see what happens.
Gotcha. Okay, cool. And then So we can do any number of those things, just using VIX kind of as that risk off hedge. And then ETH, in the past we talked about this, and I actually put this on. We talked about that micro strategy, sell the premium micro strategy, go out and buy ETH, ETH ETF. But for this one with this, the flatness of this term structure on ETH, what are you looking at there? Is it just 25 delta call in October because you think that there's this catalyst for the staking yields getting approved by the SEC? Do you think is that a catalyst you think to push ETH above 5K or, play for that basically?
Yep. So I would look at something like selling the September 26th expiration, the 37.5 call. And then I would go to like the October 24th expiration and buy the 42 call. So that's about delta neutral between the two. I think that spread is about 33 cents. And the idea here is you put that spread on. The worst case scenario is differential between these two strikes. So if ETH starts to break above the 5K level, that puts the ETF at about $39. That would be sort of the worst case outcome, and you would take a loss. If we kind of just hang out here and continue to consolidate and sort of grind higher into October, that front month contract should roll off before we get to that 37.5 level, and then by that expiration, you have kind of a fully outright call, and typically I would take some off at that point and maybe let a couple ride.
Gotcha. Okay. So we're looking at September 26th, selling the 37.5 call, and then buying the October 24th 40. You said 40, 40-ish? 42.
Yep.
Yeah. Okay. So we're looking at 30 cents, 31 cents. Yeah. Okay. Delta is about delta neutral. It's about 0.3 delta. Yeah. Okay. Yeah. That. So and you're just waiting. And basically what we're doing here is hopefully that front month just kind of rolls off and we play for that up move in October.
Yep.
Okay.
So
awesome.
My thinking is October remains firm, sort of because of that catalyst. My thinking is that the front month vol comes down because we kind of consolidate below all-time highs. ETH finds its footing. And so each day that goes by, I pick up deltas.
Okay. Awesome. Is there anything that you could see that might kind of, I guess, nullify this outlook? Is it more bad data? Is it, I don't know, they pause interest rates? Is there anything on the horizon you're like, maybe we take a step back and, maybe not go? Yeah.
So the wild card is inflation data. So we got PPI tomorrow. We got CPI on Wednesday. If we're starting to get hot inflation prints, rates are going to reprice the other way, which will be great for that VIX hedge. But it's going to change the profile of the path of rates.
And and have you been tracking that? Like, is there anything you're looking at that could give us an insight into this inflation, or do we think that's why the probabilities have shifted to rate cuts, 2 rate cuts? Is that? Do you have a sense of inflation?
No one really knows, but obviously Powell kind of shifted towards labor market being a little bit more important versus inflation on his Jackson Hole speech. But obviously, the inflation data depends how it comes out. The one thing to keep in mind is that a year ago, when the Fed cut 50 basis points, inflation was lower. And today, rates are lower and inflation is higher. So if we get bad inflation prints, it's going to look tough for rate cuts in a rate environment. But we'll see how that goes. The one thing that is cheap is energy. I think sort of the Trump policy is to do deregulation on energy and do negotiations with energy trading partners. And so we've seen, gas, WTI be pretty low, natural gas be pretty low. So I think his thinking is that if I keep energy prices down, that should combat any sort of inflationary forces. But we'll see. It's hard to tell. I don't think anyone knows.
I would love to actually dig into some of the energy. Do you trade that at all? The future energy futures, or like oil future?
No,
Okay.
no,
Just
it's
something
not
to
something I
track.
look at.
Yeah. Okay. How about gold? Do you think gold's telling us any? I know we talked about this a little bit earlier, where that divergence between gold and Bitcoin could be a tell, but is gold telling us anything about inflation? You think?
So yes, I think gold is telling us quite an interesting story about inflation expectations. This is a gold rally that I haven't seen in my trading career, really. So
Yeah.
it's
Yeah.
that's why I do think the gold profile is bullish for Bitcoin. I do think it's relevant that gold has such a bigger market cap than Bitcoin. But yeah, it's something to keep in mind. And the risk reversal in gold is positive right now by about a percentage point, a full percentage point. So that 25 delta call is about 1% more expensive than a 25 delta put.
Gotcha. Okay. And then because, and I know like in your newsletter you have you kind of follow some of the institutional flows in Bitcoin options, ETH options, crypto options in general. Is there anything you've looked at? Like, is there any big noticeable structures or anything, positioning that is interesting or standing out to you? Block trades, anything there?
Yeah, actually, so when we look at, so if we look at the risk reversal in Ethereum, ETH tried to get, to that $5,000 level back in August 24th area, 24th, 25th, got instantly rejected. That flipped that risk reversal into negative territory. And we haven't been able to kind of get back into that positive territory, which that's why I'm thinking there's a little bit of consolidation period here. And if we look at the gamma exposure, so how dealers are positioned on Darebit, dealers are short a lot of gamma around 4K to 4,200. So that's typically the street buying put options around the 4K level as a significant level. And then they're also short the 5K level. So that would be the street buying 5K calls. So that's really where, lines in the sand are being drawn right now. And sort of that put buying action is what's causing that risk reversal to be so negative and the front end of the term structure to be so firm.
Gotcha. Okay. And what is that like? If they're short, if dealers are short that 5K gamma and then they're long buying puts essentially in that 4K, if we get to those levels, does that like do you expect like violent moves down? Does that kind of cause any type of move in the price? From that positioning.
So I'd say dealers are short on the 5K and short at the 4K level.
Sure.
In the street would be long on those. So typically the option market is big enough to like cause sort of acceleration movements in those type of zones. I would say crypto vol is still relatively small compared to the underlying market caps. So as of this point, I don't think the gamma rebalancing is necessarily an accelerant, but it's a good sign of sentiment of where sort of option activity is being drawn. And so in my mind, what I'm seeing here is that this sentiment helps explain the vol surface and how people are looking at potential price movements in ETH in the short term here.
Gotcha. Okay. Yeah. So we got about a minute left, Greg. Anything else you want to add in or let the viewers know, or just, where they can follow you?
Yeah, absolutely. So if anyone wants to check out some of these charts and look at IBIT volatility, Coinbase volatility, MicroStrategy, or Darebit vol, or anything like that, you can go to our application, pro.amberdata.io. And then if you want to read our weekly notes on the vol market and what's going on in the space, you can go to amberdataderivative.substack.com.
Awesome. Well, that's Greg. We love having you on. Appreciate you joining the show. We'll have you on again in a couple weeks. Obviously, we want to take a look and see how everything shapes out over the next couple weeks here. Obviously into October. Appreciate you coming on, and we'll chat again soon. So that's all we have today. Yeah, that's all we have today. We'll see you guys next time. Peace.